guys, Chris Gunnels with Real Financial Success. It's been a while since I've made a video for you, but I wanted to make a quick video of a trade that I placed last week, and I was able to turn it into a risk-free trade within a couple days. So let's dive right into it. The trade is in Ciena Corporation. Their ticker is CIEN. And the other day on the 12th, they had earnings and it gapped up, as you can see right here. And this, what my thought process was that the market has been going down, but this gapped up. So I figured, you know what, it's probably going to gap up, but eventually come down. And so on this very day, on the 13th, the day after earnings, I just scanned looking for whatever underlying has gone up in a down market, and I found this stock. And so what I ended up doing was I put on a it's called a jade lizard, and I think it was coined by the ladies there at Tasty Works, or rather Tasty Trade, Liz and Jenny. And anyway, I put that trade on. Let me show you exactly. I put it on the 13th, December the 13th. And all it is where you sell a put, and you sell like a bear call spread or something, or basically you sell a call spread and you sell a put. And that's the jade lizard. But actually, let me see if I can show you on the trade page. Analysis. So let's take off. What did I buy? Oh, I bought the call. So this is what I put on. A jade lizard is actually, well, it depends on which way you go, but most of the time, this is what a jade lizard will look like. So your risk is to the downside. Basically, if the stock goes down. But remember, I saw that the stock gapped up, and I didn't think it was going to go any higher because it's going higher against a massive down market. All the indices, the S&P, the Dow Jones, the NASDAQ, the Russell, they were all going down, and they've been going down since October. So I figured, you know what's going to happen is this stock's going to go back down, and it's going to fill the gap. So this is what I did, was I put my risk to the upside. I hedged my bet, saying that this stock was going to go down. And sure enough, if we go back to the chart, you can see here that the next couple days it's been going down. So let's go back to the trade page here. And what I did, so this was my initial trade on day one on December 13th. Okay. It's where I sold a call. What strike was that? The 36 call strike for $1.05, and then I sold a put spread. Okay, I sold the put, the 35 put for $1.10, but then I had to buy the 34 put for 75 cents. So what is that? I don't know, maybe $1.30 or something. I'm not quite sure. I can't do the math in my head. But basically, it was over $1 in credit, and my thought was, you know what? I don't want to have any risk in the trade at all. What happens if some miracle the stock just keeps going up? What I did was I put a good till cancel order in. Where I would buy the 37 call for 33 cents, and it was just sitting in my account. And as the market went down and went in my favor, if we go back to the chart, as it came down on the 17th, so Monday, today is the 18th, yeah, today's the 18th, and so on Monday, yesterday, it went down just enough for me to for the good till cancel order to get filled, and I got filled at 33 cents. So my total credit is $1.07. And remember, each contract that you sell is worth 100 shares. So $1.07 times 100 is $107 credit. Now, let me show you what's cool about this. I did mention that it's risk-free, the trade, and this is what it looks like. So no matter how far the market goes down for this specific stock, or if it goes up, it doesn't matter. The trade is risk-free. I can make a minimum $7. Of course, you got to take out commissions. Commissions in this case is only $4. So I'll make around $3 or something net profit. If it goes past my my 34 put price here, or the 37 call strike price. But if it lands right here in the middle, I can make a total of $107 at expiration, and this expires in, I think it's January, right? Yeah, January 18th. So I think like 30 days or something like that exactly, or 31 days. Anyway, so I thought that was cool, and I wanted to share that with you. So basically, all you do, to recap, all you do is you purchase, or excuse me, you sell a spread, essentially. In this case, it happens to be the Jade Lizard, as you can see here, and this is what it'll look like at the time that you are filled on this trade. Okay, for the first initial fill is what it'll look like if you're short the call side, or naked the call side rather, and then all you do is you put a good till canceled order. So when you buy that call option, you want to make sure that your total credit is more than $1 if your spread is is $1. In this case, remember I sold the 36 call option, and then I bought the 37, so that's $1. And so that's the magic trick there. Is just when you go to buy the option, make sure that you're not purchasing it for more than the width of the spread. Okay, and that's about it. It was just a quick video, and I want to go back to actually the history and let you guys see again how I did this. So initial order or initial trade was the Jade Lizard, selling the put, buying a put, and then selling the call. You can of course reverse this if your sentiment is that the stock is going to go up, and then later on at some point you want to purchase a call spread, or I keep saying that, a call option, to minimize or get rid of all of the risk in the trade. So all I have to do now is just sit here till January 18th and let it expire, and I'll either make $7 or anything from $7 up to $107, depending on where the stock price is at expiration. So what's cool about this now is that I have zero risk in the trade, and the initial buying power that it took to get filled on this trade on December 13th is now gone. I don't have to use any more buying power because the trade is risk-free. I can take that buying power and put it into a new trade. Okay guys, thanks for listening, thanks for paying attention, and I hope this helps you out. I'm going to drop a link in the description for you guys to check out Tastyworks. Go open an account. It's free, other than the cost to fund your account, of course. But check it out and get going with Tastyworks. They have like the best commissions that I've seen. It doesn't cost to close your trades like it does on other platforms like TD Ameritrade and stuff. So check it out. It's free, and I hope the best. Remember guys, keep up the trading, trade within your account size, and try to get some risk-free trades. See ya.